we have discussed about the basic concepts of company final accounts. That is the first unit of the advanced financial accounting. Today let us discuss about the financial statement. What does it include? How to prepare a financial statements. As we know, what are all the financial statements, what it includes the financial statements. Basically, financial statements which includes statement of profit and loss account. As per the Company Act of 2013, we prepare vertical format of statement of profit and loss. Earlier to this, we had very much familiar with the horizontal format of profit and loss account. Now we do not say that as an account, it is a statement which shows the profit and losses. Okay, so now today let us learn about how to prepare a profit and loss account. So let us discuss about the format and also we'll solve some of the problems of preparing the profit and loss account, profit and loss statement. Okay, as per the Companies Act of 2013, we prepare statement of profit and loss, statement of profit and loss. Always the profit and loss will be prepared for the year ending. It is not the particular period like 1 month, 2 months. It will be prepared for the particular year always. So if it is the financial year 2023-24, for the whole period of 2023-24 will be prepared, and that too this statement will be prepared at the end of the year always. So statement of profit and loss for the year ending, which date? It can be 31st March of any year. Suppose this year, like for the financial year 2023-24, it is 31st March 2024. Okay, so like this we have to give a heading, and before to this actually we mention for which company we are going to prepare the statement of profit and loss. So for example, X Limited is preparing this statement of profit and loss. So X Limited will be mentioned in beginning of this statement of profit and loss. Let us learn about this format. The vertical format of this statement of profit and loss, which includes, we do not mention anywhere debit or credit for this. Earlier to this, we were preparing the profit and loss account which were considered as debit and credit side of account. Debit side we used to mention all the expenses and losses, and credit side we used to consider the incomes and profits, correct? But here in this vertical format we are not going to divide debit and credit, neither it is a vertical format of statement of profit and loss which considers particulars, and these two columns are amount columns, amount in rupees, and this is amount in rupees. And the first item of this statement of profit and loss as per the Companies Act of 2013, which includes sales, or it is also called as revenue. Okay, so this, if there is a sales given, and this sales, from this sales we deduct if there is any sales return. This sales return will be deducted, and after deducting the sales return, whatever the balance we get, this balance is called as net sales. The balance is called as what? Net sales. From this net sales, we have to deduct cost of goods sold. We need to understand what is this cost of goods sold. So before to that, let us understand the statement of profit and loss. From this net sales, if you deduct the cost of goods sold. Actually, this cost of goods sold is also called as factory expenses. I will explain you later how to prepare this, how to obtain this cost of goods sold. So COGS, nothing but cost of goods sold. If you deduct this cost of goods sold from the net sales, balance what we get is called as gross profit. This is called as gross profit. Earlier to this, in this profit and loss account, how do we obtain for this gross profit? So we used to prepare the trading account. In that trading account, credit side we used to mention the sales, debit side we used to mention two purchases, if there is any purchase return, everything would be adjusted. If there is any direct expenses, that would be debited. And on the credit side, we used to also mention sales and closing stock. The differences of that, we used to get that gross profit. Here also in the same manner, we are going to consider this gross profit. See, look at here the cost of goods sold. How to obtain for this cost of goods sold? How to prepare this cost of goods sold is a question. So, cost of goods sold can be calculated like this. So, for example, we have opening stock. We take opening stock. Opening stock. All the trading item only we are taking here. Okay. Opening stock plus purchases. If there is any purchase returns or purchase allowances or purchase discounts, that should be deducted from this opening stock less purchase return. This item we are going to deduct, and next is discount. This discount is a purchase discount. If there is any purchase discount we need to deduct, then we have obtained, then discount received should be deducted from this opening stock. Like same way, if we have received any kind of purchase allowances from the creditors, that can also be deducted. And then we have to add back if there is any direct expenses, that direct expenses must have to be added. So for example, direct expenses which includes freight inwards, carriage inwards, wages, all the factory expenses, okay. That factory expenses, direct expenses for bringing the raw material to the factory from the place of purchase, okay. That is called as the direct expenses. If you add the balance what you get, from that we need to deduct closing stock. We need to deduct the closing stock. If you deduct this closing stock, the balance what you get is called as cost of goods sold. This is called as cost of goods sold. I will repeat once again. To calculate the cost of goods sold, we need to take opening stock. For this opening stock, we have to make some adjustment, additions and deductions. Add purchases, deduct purchase return if any purchase discount, any purchase allowances must be deducted, and for that we need to add back the direct expenses. For the adjustment what we make for the opening stock and the amount what we obtain, for that we need to deduct the closing stock. That means opening stock, majorly we take this opening stock plus purchases plus any direct expenses minus closing stock will be called as cost of goods sold. I hope you have understood this calculation of cost of goods sold clearly. So this net sales minus cost of goods sold is called as what? Gross profit. Now we have obtained for the gross profit. So for this gross profit we have to make some adjustments of operating expenses and non-operating expenses and also non-operating losses, etc. to prepare this statement of profit and loss. Let us understand further. After preparing the gross profit, further we have to deduct operating expenses. So operating expenses must have to be deducted. So what are called as operating expenses is a question. So operating expenses can be the expenses which is incurred for day-to-day operational activities of the business. So after deduct, I will give an example. Say for example, for the operating expenses, like rent, salaries, printing and stationaries, all these are the expenses, the indirect expenses called as office and administrative expenses. This operating expenses can also be called as office and administrative expenses incurred for meeting the day-to-day activities of the business. So if you deduct this operating expenses from the gross profit, the balance is called as EBITDA. We say this as EBITDA. What is this EBITDA? Earning is nothing but earning before interest and tax and depreciation and amortization. Earning before interest, tax, depreciation and amortization. We say this as EBITDA. We are not arrived till operating profit. Still we have to make some adjustment for arriving the operating profit. So we have arrived for EBITDA. Now let us deduct depreciation and amortization first. Depreciation and amortization. D and A is nothing but depreciation and amortization. We are deducting one by one. So after deducting depreciation and amortization, the balance what we get is called as operating profit. The balance what we get is called as operating profit, and this operating profit is also called as EBIT. EBIT we say. So EBIT is nothing but earning before interest and tax, and this earning before interest and tax is also called as operating profit. Okay, so I hope you have understood till now. I'll repeat once again. Sales minus sales revenue, sales return, you will get net sales. From this, if you deduct cost of goods sold, the balance what we get is called as gross profit. Now deduct operating expenses, that is office and administrative expenses. The balance what we get is called EBITDA. So this is nothing but earning before interest, tax, depreciation and amortization. Deduct depreciation and amortization. The balance what we obtain is called as EBIT. It's nothing but EBIT, earning before interest and tax. This is also called as operating profit. Okay, now we have obtained for earning before interest and tax, that is operating profit. Further, so to arrive for the net profit, what we have to do for this operating profit, I'm continuing here by taking operating profit, operating profit is nothing but earning before interest and tax. For this operating profit, we have to make some adjustment. What adjustment should be done? So here we need to add some expenditure and deduct some income. Add some incomes and deduct some expenditure. So what is that? We need to add back non-operating income should be added here. So what are the non-operating incomes? Non-operating income can be like profit on sale of fixed assets. Those are not the direct operating activity of the business. So any dividend received from the from the investment, those are the non-operating incomes which is received by the business. That income should be added. And for this, we need to deduct non-operating expenses and losses. Non-operating expenses and losses. So if you deduct non-operating expenses and losses after adding non-operating income, what we get is called as EBT. What is nothing but this EBT? Earning before tax. We have deducted all the interest received or interest expenditure incurred, etc. Any interest payment like non-operating expenses and losses, everything we have deducted. After deducting the balance, what we obtain is called as earning before tax. So this earning before tax, from this we need to deduct one item left out, that is tax. So now deduct tax. If you deduct tax, the balance what we get is called as EAT. EAT is nothing but earning after tax, and this is also called as net profit. This is also called as net profit. So now we have to arrive till here. So this is the format of statement of profit and loss. So in order to obtain the net profit, we have to take the sales, and after adding and deducting some expenditure and incomes, we will obtain for the net profit. So earlier to this, as I said, we used to prepare the account, that is profit and loss account, showing debit items and the credit items. Now here, without showing debit and credit items, within the same headings, within the same items, we have made some adjustment. After making some adjustment, we have arrived for this net profit. Now, for preparing this statement of profit and loss, let us understand this by preparing a statement of profit and loss with some illustration. Okay. Now, dear students, let us learn by preparing some of the problems to prepare the statement of profit and loss. Before preparing the statement of profit and loss, with some example, let us understand how to calculate the cost of goods sold, gross profit, etc. Okay. So I have come out with some illustrations. Calculate cost of goods sold and gross profit from the following information. Here, you need to calculate cost of goods sold and the gross profit with the information given below. What does the information is there in the problem? Beginning inventory 5,500. So this beginning inventory is nothing but opening stock. So this is the first item of calculating the cost of goods sold. For this, we will have to make some adjustment, like purchases 1,05,000 is given. What we have to do for the purchases? So this purchases must be added. Correct. So next is purchase returns and allowances. As I explained, purchase return, allowances and discount if any must be deducted. So this purchase return and allowances of 3,500 must be deducted. Next is purchase discount. Even the purchase discount must also have to be deducted. And for the freight inwards. Freight inwards being a direct expenses, like we are incurring some expenditure for bringing the raw material, that is called as carriage inwards or freight inwards or transportation expenditure. So this is a direct expenses, it should be added. And further, ending inventory. Inventory is nothing but stock. Beginning inventory means opening stock, and ending inventory is nothing but it is a closing stock. So this closing stock is to be deducted. And further, they have given sales revenue. Why do we require this sales revenue? To calculate the cost of goods sold, we need only these information. Whereas this sales revenue, we have to take this for the calculation of gross profit. So sales minus cost of goods sold is nothing but gross profit, correct? So for that we need this sales revenue. Let us understand, let us work out to calculate cost of goods sold and gross profit. Give heading, so the calculation of cost of goods sold. So let us give heading, calculation of cost of goods sold. This is the format, that is particulars particulars. This is amount in rupees and amount in rupees. The first item, as per the information given in the problem, it is a beginning inventory. Beginning inventory is nothing but the opening stock. Let us take this beginning inventory. Beginning inventory. What is the amount of beginning inventory? It is 5,500. Next, add purchases. What is the amount of purchases? It is 1,05,000. I am taking this in the inner column. Why? Because after making some adjustment of purchase returns, purchase allowances, purchase discount, etc., the net purchases can be taken to the outer column to add to the beginning inventory. So for this, we can deduct purchase returns, and allowances. What is the amount of purchase return and allowances? It is 3,500. Next is purchase discount. So that should also be deducted. Purchase discount. The amount of purchase discount is 1,500. So now take this to the outer column. 1,05,000 minus 3,500 minus 1,500, it is 1 lakh. Now if there is any direct expenses which can be added, the direct expenses, there is only one direct expenses, that is freight inward. So this freight inward is 9,000. So there is no other adding expenditure or the direct expenses. Take this total. So 1 lakh plus 9,000 plus 5,500, it is 1,14,500. Okay. So for this, deduct closing inventory, or we can say ending inventory, closing inventory. What is the amount of closing inventory? It is 8,500. So if you deduct this, the balance what we get is called as cost of goods sold. So let us calculate cost of goods sold by making this adjustment. 1,14,500 minus 8,500. The balance what we get is 1,06,000. This is called cost of goods sold. So now let us calculate gross profit. I hope you have understood how to calculate the cost of goods sold by taking all the information, that is opening stock, beginning inventory, by adding purchases, adding freight inwards or the direct expenses, and deducting closing inventory. The balance what we get is called as cost of goods sold. How much is the cost of goods sold? The cost of goods sold is 1,06,000. So now we also have to calculate gross profit. Let us calculate gross profit. How to calculate the gross profit? Gross profit can be calculated by taking a subtraction from the sales and the cost of goods sold. So let us give a heading, calculation of gross profit. Particulars, one amount column is enough. Particulars and amount column. Okay, let us take first sales or sales revenue. What is the amount of sales? Sales, it is 1,25,000, and we have arrived for the cost of goods sold of 1,06,000, correct? So what is the cost of goods sold we have calculated? We have calculated the cost of goods sold is 1,06,000. Let us deduct this from the sales. Minus cost of goods sold is 1,05,000. 6,000. If you deduct this, the balance what we get is called as gross profit. So this gross profit is nothing but sales minus cost of goods sold. Okay, so 1,25,000 minus 1,06,000 is 19,000 is the gross profit. Okay, in the previous problem we have discussed and calculated, we have learned to calculate cost of goods sold and gross profit. So similarly, even this problem also asked us to calculate cost of goods sold and gross profit. So just for understanding more and more to clear about this cost of goods sold and gross profit, I am going to solve one more problem. Calculate the cost of goods sold and the gross profit with the following information. We have opening stock here, purchases, return outwards of 10,000, sales 2 lakh, return inwards 15,000, carriage inwards 20,000, closing stock 54,000. Okay, here earlier to this, in the previous problem, we had information like purchase return, sales return, etc. But in this problem, you could see the return outwards and return inwards. What it means? What do you mean by return outwards and return inwards? See, return outwards in the sense, the product which we have purchased, we are returning back. Means the purchased product which we are returning to the supplier. Okay, that means it is a purchase return. Return outwards is nothing but purchase return, whereas return inwards, we have sold goods to the customer, and the customer, due to some the discrepancies in the goods, they are returning to the company. In the sense, return is coming to the company. Return inwards is nothing but sales return. So this you have to understand. If you know clearly what is return outwards and return inwards, it would help you to calculate this cost of goods sold and gross profit. So now this is also very simple problem. Let us understand. Okay, so let us calculate cost of goods sold first. Calculation of cost of goods sold. Particulars, amount in rupees, So first, what we have to take? The opening stock. Let us take the opening stock first. Okay, opening stock. What is the amount of opening stock? It is 50,000. For this, we need to add purchases. What is the amount of purchases? 1 lakh. I am writing this in the inner column to make some adjustment of return inwards or the purchase return, etc. Okay. So now deduct return outwards. Return outwards is the item of purchase return. Okay. So return outwards must be deducted. Return outwards. What is the amount of return outwards? It is 10,000. Is there any like return allowances, purchase allowances, purchase discount? Nothing is given in the problem. Let us take that to the outer column directly. 1 lakh minus the 10,000 is 90,000. And if there is any direct expenses can be like carriage inwards, freight inwards, wages, etc. Here in this problem, they have given carriage inwards. The amount of carriage inwards, it is 20,000 and no other items. So let us take this total 50,000 plus 90,000 plus 20,000. It is 1,60,000. Now deduct closing stock. Closing stock. So the amount of closing stock is 54,000. 54,000. If you take the difference of this, the balance what we get is called as cost of goods sold. So that difference is 1,06,000. 1,06,000. So now we have calculated the cost of goods sold like earlier. Now let us calculate the cost of, gross profit. What is the amount of cost of goods sold? We have calculated the cost of goods sold as 1,06,000 and we have given sales and sales return. So after making some adjustment of sales and sales return, if you deduct this cost of goods sold, the balance will be called as gross profit. So that is calculation of gross profit. Calculation of gross profit. So let us take sales first. Actually the format should be taken like particulars and amount in rupees. I am directly going further because you have understood the format already. So the sales it is given in the problem as 2 lakh rupees. 2 lakh rupees. So since sales revenue is sales return is also given, called as return inwards. Return inwards is nothing but sales return. So this sales return must be deducted from the sales revenue or from the sales to know the net sales. Like how we deduct purchase return from the purchases, like same way sales return must be deducted from the sales. So now deduct return inwards. Return inwards. Return inwards, it is 15,000. The balance after deducting this 15,000 from 2 lakh, the balance is 1,85,000. This is called as net sales. Net sales. Now deduct cost of goods sold. So the cost of goods sold which we have calculated, we can say like working note number 1. As we have already calculated the cost of goods sold in the previous page, that is 1,06,000 rupees we have calculated, correct? So that 1,06,000 should be deducted from the net sales. 1,06,000 and the balance what we get is 79,000. 79,000 is called as gross profit. So we have learned now to calculate cost of goods sold and gross profit. So in the next class, let us prepare the statement of profit and loss with the given information. So till now, you can keep working on the calculation of cost of goods sold and gross profit. Thank you.